Stop looking at the aircraft carriers. Stop looking at the political theater in Washington. Stop being hypnotized by the headlines about kinetic movements in the Middle East. They are distractions designed to keep your eyes off the crime scene. You need to look at exactly one thing. You need to look at the spread, $17. That is the number that signals the death of the global financial system as you know it. In the latest data stream, the price of silver did not just break a record. It broke the mechanism of reality itself. We are witnessing a physical decoupling that forensic analysts have warned about for decades. But now it is no longer a theory. It is a mathematical certainty. The price of silver has breached $113 per ounce. But that number is meaningless. It is a ghost. The real story, the story that the mainstream media is too incompetent to analyze, is the $17 gap between the price in London and the price in Shanghai. This is not just a market anomaly, this is a structural fracture. In a functioning market, traders would buy the cheaper metal in London and sell it in Shanghai to profit from the difference, closing the gap instantly. That is the law of arbitrage. But that is not happening. The gap remains open. The gap is widening. Why? Because the metal in London does not exist. You cannot arbitrage what you cannot touch. The traders know that if they try to withdraw their metal from the London vaults to ship it east, they will be met with silence. The exits are blocked. The paper market is trading air, while the physical market in the east is trading reality. This is the definition of a market failure. But the $17 spread is just the surface of the fracture. The true rot, the evidence that terrified the central planners in the last 48 hours, lies in the lease rates. Look at the data. The lease rates for silver have spiked to 8%. Understand what this means. This is the heartbeat of the physical market, and it is going into cardiac arrest. When bullion banks demand an 8% interest rate just to lend out silver for a short period, it means they are terrified of never getting the metal back. In a normal market, banks are happy to lease out their idle metal to earn a small fee. Today, they are hoarding it. They would rather sit on the metal than earn free money, because they know that once that bar leaves their vault, it is gone forever. This is backwardation on a systemic scale. It is the loudest alarm bell in the financial world, screaming that there is a catastrophic shortage of physical collateral. The banking system is admitting, through its own pricing models, that the cupboards are bare. You might ask why this shortage is happening now. Why did the system break this week? The answer does not lie in New York or London. It lies in the convergence of three kinetic wars that have severed the global supply chain. While you were watching the Armada deploy to Iran, the real war was being fought in the mines and the ports. We are seeing the results of the China Wall scenario, which activated on the first day of 2026. Beijing did not just restrict exports, they strangled them. The latest customs data confirms that silver exports from China have dropped to zero. This is a strategic resource seizure. China knows that its solar panel industry and its artificial intelligence infrastructure consume 80% of its domestic production. They have done the math. They have realized that in a world of kinetic conflict, silver is more valuable than dollars. So they closed the gates. The flow of refined silver from the east to the west has been severed. This is the first jaw of the pincer that is crushing the Western markets. But the pincer has a second jaw, and it is closing just as fast. Look at the situation in Peru. This is the third largest silver producer on the planet, and it is currently in a state of total paralysis. The expiration of the Reinfo licensing program was not a bureaucratic hurdle. It was a demolition charge. 300,000 artisanal miners were criminalized overnight. These are the people who supply 40% of the ore that feeds the official refineries. When the government declared them illegal, they did not go home. They went to the highways. They have blockaded the transport routes, cutting off the flow of raw ore to the ports. The supply chain has not just slowed down, it has been decapitated. You have the world's largest refiner in China hoarding inventory, and the world's key producer in Peru unable to move rocks. This is a double supply shock of a magnitude we have never seen in history. This explains the panic we are seeing in the inventory data. Look at the COMEX warehouses. The eligible inventory has plummeted to 113.27 million ounces. That sounds like a lot until you realize that most of that metal is not for sale. It is owned by entities who are watching the same news you are. They are not selling. The registered inventory, the metal that is actually available for delivery against futures contracts, is dangerously low. We are approaching the point of physical default. The ratio of paper claims to physical ounces is stretching to the breaking point. When the lease rates hit 8%, the insiders told you everything you need to know. They are telling you that the paper price of $113 is a lie. The real price is the price you pay to actually hold the metal in your hand. And that price is detaching from the screen. But do not make the mistake of thinking this is just a commodity squeeze. This is a currency event. The spike in gold to $5,345 is the other side of the same coin. Gold and silver are not rising in a vacuum. They are rising because the dollar is dying. The deployment of the Armada to the Middle East is an inflationary event. It requires massive amounts of capital. It requires printed money. The bond market knows this. The Danish pension funds know this. That is why they are selling U.S. treasuries. They know that the only way to fund this kinetic event is for the Federal Reserve to monetize the debt. This creates a feedback loop of destruction. The more money they print to fund the fleet, the less the dollar is worth. The less the dollar is worth, the higher gold and silver rise. The higher gold and silver rise, the more the bond market panics. It is a death spiral. And in the middle of this spiral sits the industrial user. The companies that build the missiles, the solar panels, and the servers for artificial intelligence. They are the ones who are about to panic the hardest. They do not buy paper contracts. They need physical metal to function. Without silver, there are no guidance systems. Without silver, there are no advanced chips. When a major tech company like Apple or Tesla realizes they cannot secure the metal they need to meet their production quotas, they will not look at the price tag. They will pay whatever it takes. We are on the verge of a force majeure declaration from a major industrial player. When that happens, when a corporation publicly admits that they cannot source silver at any price, the price on the screen will become irrelevant. We will enter a period of unobtainium where the only price that matters is not for sale. The $17 spread between London and Shanghai is the crack in the dam. The water is pouring through. The bullion banks in London are trying to plug the hole with paper. But you cannot plug a physical shortage with digital promises. The East is draining the West. The smart money has already left the vault. The lease rates prove it. The inventory data proves it. The silence from the Peruvian mines proves it. The system is out of metal. The paper game ends when the physical delivery is demanded. And right now, the entire world is standing at the delivery window demanding their metal. Do not be distracted by the noise of the fleet. The ships are just steel targets floating in the water. The real war is being fought in the ledgers of the bullion banks. The real war is the revaluation of real assets against a failing fiat currency. Gold at $5,300 is a warning. Silver at $113 is an opportunity. But only if you can actually get your hands on it. The window is closing. The spread is widening. The lease rates are screaming. The market is telling you that the dollar is no longer a valid store of value. It is telling you that physical possession is the only law that remains. You must understand the gravity of the unobtainium phase we are entering. This is not about price appreciation anymore. This is about availability. In previous crises, you could always buy the metal if you were willing to pay a premium. In this crisis, the premium is infinity because the metal is not there. The paralysis in Peru means that new supply is not coming online to rescue the market. The blockade in China means that existing stockpiles are locked behind a geopolitical wall. The depletion in London means that the buffer stock is gone. There is no cavalry coming over the hill. There is no secret stockpile that the central banks can dump on the market to suppress the price. They used that ammunition years ago. Now, they are naked. This is why the lease rate is the most critical number in the world right now. It is the distress signal of the banking system. It is the equivalent of a bank run. But instead of lining up for cash, the insiders are lining up for bars, and the teller's window is closed. When the lease rate stays at 8% or climbs higher, it triggers a chain reaction in the derivatives market. The shorts, the entities that have sold paper, silver they do not own, are trapped. They have to borrow metal to deliver. But they cannot borrow it because no one is lending, so they have to buy it. But they cannot buy it because there is no volume. This is the recipe for a super spike. A vertical move that clears the order book and leaves the market in a state of suspended animation. We are watching the end of the suppression era. For decades, the paper market has been used to control the price of physical assets. That mechanism relies on one assumption that there is always enough physical metal to satisfy the few people who actually ask for delivery. That assumption died this week. The demand from the kinetic sector, combined with the demand from the monetary sector, has overwhelmed the physical supply. The paper tail can no longer wag the physical dog. The dog has snapped the leash. The implications for your personal sovereignty are absolute. If you are holding paper silver or an ETF that claims to hold silver, you are holding a claim on a bankrupt entity. When the force majeure comes, your contract will be settled in cash. You will get your dollars back. But those dollars will be worthless in real terms. And you will not have the metal. You will be left with the currency of the loser. While the metal sits in the vaults of Shanghai and the private stockpiles of the prepared, the decoupling is the separation of the prepared from the victims. The spread is the cost of your hesitation. This is a forensic certainty. The energy required to mine the silver does not exist at the old price. The political stability required to transport the silver does not exist. The geopolitical trust required to trade the silver does not exist. Therefore, the price must reset to a level that reflects this new reality of chaos and scarcity. That level is not $113. That level is multiples higher. But again, the price in dollars is the wrong metric. The metric is ounces. How many ounces do you control? Not how many ounces does your broker show on a screen. How many ounces can you touch? The illusion of abundance is over. The reality of scarcity is here. The Armada may be sailing to Iran, but the real kinetic event has already happened in the commodities market. The torpedo has hit the hull of the USS Dollar. The ship is taking on water. The gold price proves it. The silver spread proves it. The lease rates prove it. The data is staring you in the face. The question is not whether the collapse will happen. The question is whether you are watching the distraction or watching the data. Do not be the person who watches the news and waits for permission to act. Permission will not come. The warning is the data itself. The warning is the $17 spread. The warning is the empty vault. The warning is the silent mine in Peru. You have been given the intelligence. You have seen the forensic evidence of a system that has run out of time and run out of metal. Stop listening to the soothing words of the stabilizers. They are lying to prevent a panic. They are lying to buy time for themselves to exit. But the exit door is small, and it is closing. The 8% lease rate is the sound of the lock clicking shut. The $113 price is the last glimpse of the old world before the lights go out. Do not hide from the reality of this audit. The system has been audited by the laws of physics, and it has been found insolvent. Now it is time to audit your own position. Do not tell me about your portfolio value in dollars. That is a hallucination. Tell me about your weight. Tell me about your ounces. If the number is 0, you are a casualty of the economic war that is raging right now. You are a volunteer victim. Do not stay silent. Silence is consent to the theft of your wealth. Silence is the hallmark of the unprepared. Prove that you are awake. Prove that you understand the difference between paper promises and physical reality. Go to the comments section right now. Write down the exact number of silver ounces you physically possess. Do not round up. Do not lie. If the number is 0, write 0. Let that number stand as a testament to your vulnerability or your preparedness. Look at the other numbers. Realize that you are not alone in this assessment, but you might be alone in your inaction. The spread is $17 today. Tomorrow it could be 50. The lease rate is 8% today. Tomorrow it could be unavailable at any price. The time for analysis is over. The time for acquisition is ending. Write your number. Accept your reality. Prepare for the decoupling.